Hi guys, and welcome back to Yashi. Today with another real estate video, but this one will be a little bit different. This is not just looking at the market, this is looking at our American consumers. You and me, what is going through our heads, what the situation is, and how we should navigate it. The question of today is, should I buy or should I rent? I've seen multiple videos in the past couple of months about this. Some people are pro buying, some people are pro renting, some people are saying wait, some people are saying buy now, refinance. Today we're gonna look at the numbers today, but since we're talking about something that takes around 30 years to fully buy, because you need a mortgage in most cases to buy a house, we're also gonna make some different calculations based on what we saw in the past, the recent trends, and how the real estate market could potentially evolve in the next couple of years and months. So guys, let's get right through it. Let's start with the current scenario. Imagine a world, the one we are in right now, where the interest rate on a 30-year mortgage finally reached 8% interest. This is one of the highest interest rates we saw in probably this millennia. We're also seeing an average rent today of $1,700, an average home price today of $416,000, which is much higher compared to pre-pandemic, which was in the mid 300,000s. We're seeing an average 4% appreciation of home prices, even though in the past couple of years it was much higher than that, and we're gonna look at that later. An annual increase in rent in the past 30 years, specifically because of what we saw in the past 3 years, of 8% a year, which is nuts. And normal maintenance costs of a house, if you're a homeowner, of 1% for the maintenance of the home value a year, plus 1% in taxes. These are all numbers we're gonna include in all this. I just wanted to throw them out for you, just to give you a couple of data points. But let's start with the simple stuff. Let's start with renting. With an initial monthly lease of $1,700 a month that we have today, and an 8% yearly increase of rent, your first year rent will be around $1,836 if you include the fact that throughout the year they will increase the rent at one point. Over 30 years, so considering that your rent will go up 8% a year on average, you'll end up paying a staggering, and this is not, the number is nuts, $2,654,000 in rent over 30 years. If you might do the normal calculation of the $1,700 you're paying today, you might say, no, that's impossible. How did you get to that number? If you include the fact that in the past couple of years, rent has been increasing more than 8% a year, but on average in the past 30, it increased 8% a year, and you do that every year because of what they call compound interest, which is not only in investing, but is also on stuff that you have to pay money on. The fact is this, that it leads to over $2 million in payments and rents. Also, keep in mind that a year, the $1,700 you're paying today is above $20,000 just in rent thrown at a homeowner that is using it to pay their own mortgage that you're paying for them. So rent is not really paying your mortgage, it's paying somebody else's in most cases. But you know that already. But here's the thing, let's look at owning a house in today's interest rates. Now, considering buying a home with an 8% interest rate on a 30-year mortgage, a $416,000 home, your monthly payment will be approximately around $3,050 a month, or around $37,000 a year, which is much higher than the $20K you're paying in rent. Now, if you add in the 1% maintenance cost a year of the house and the 1% property tax, if you do an average across all states, we're around 1%, is another $4,160 and $4,160, sorry. We also consider a 4% appreciation rate of the house every single year over 30 years. You'd have spent around $1.6 million to own that house upright over 30 years, and the house will be valued around $1.139 million. So in this case, you spend more than the value of the house over 30 years. So one side sucks, but you're forgetting the fact that unlike renting, where you paid $2.5 million in rent for 30 years and you're owning nothing, you now own something and you have an extra $1.1 million in your pocket, and you spent a whole $1 million less almost than renting. So you spent $1 million less and you got $1.1 million more, which means you're $2 million richer than if you were renting. That is nuts if you think about it. What could you do with an extra $2 million in your pocket? $2 million in your pocket is making you a multimillionaire officially. That is a substantial change between the two. So as per now, you have the numbers. $2.5 spent if you consider the appreciation in rent and 30 years of time, and $1.6 spent if you're buying a house, if you consider an 8% interest rates and an appreciation of 4%. These are the numbers we have today. But now let's analyze the bigger picture. It is crucial to consider the context when we're looking at home appreciation if you want to buy a house. Over the past few years, home prices have surged around 11% a year if you consider 2020 to 2022. And this happened also including the last year where interest rates went from 3% all the way to 8% on a 30-year mortgage, dampening the demand. We're also not calculating that in the past 3 years we have not built enough homes to satisfy the multi-million housing shortage we still have, and we're now building even less than before. So the discrepancy between how many homes we need and the homes we're building is becoming larger and larger. And because of economics, the work on the concept of supply and demand, the less supply we have and the more demand we'll have, the higher the appreciation will be. As per now, there's calculated that we need between $3 to $6 million homes still to satisfy the demand of today. And there are other trends that are showing us that the demand will be even higher. The rise of the single person household, coming in of millennials that want to buy, future Gen Z that will be able to buy, and much more. The demand will be higher and higher. And yes, we have baby boomers that will leave their wealth to their kids, but the trend is still there, the growth in demand. So if we take a lower number compared to the average we've seen in the past 3 years in terms of how much home prices can go up, let's say around 11%, and we know that this demand and supply problem will keep on happening in the next, let's say 20 years because we're not building enough, and we consider an 11% appreciation in home values, which yes is a lot, but if you look at what happened the past years, where we even saw years with 15, 16% appreciation, and we redo the whole calculation of the home price in 30 years, that house that you're buying $416,000 today could potentially be worth $2.5 million and more. Which means that there could be a high chance, a pretty good chance, this is not financial advice, this is just economical analysis and my opinion, so do your research. In my opinion, there could be a potential for you to have a house that is worth much more, than what you paid in total in the next 30 years. For the same reason, we're not even calculating the issue that could be in the rental market. As we're not building enough homes and the demand for housing is still very high, the problem is that we won't have enough homes to rent out too, which could lead to a potential increase in rents at a much higher pace than what we saw or what we see in the past 30 years. That could be another risk, which means that the $2.5 million that you could potentially be paying that we calculated in this video could even be more potentially. The cool thing of buying a house is that you're stabilizing your cost of housing for the next 30 years. You know that your mortgage, if you take out taxes and stuff, once you hit it, is around $3,000. And that will be the cost of your mortgage for your next 30 years. Rents, on the other hand, are lower today, but they could rise much more in the future. Because generally speaking, rents have been going up forever. And 30 years is a long period of time. You'll be surprised by how much you can compound and increase the rent over the next 30 years. Last but not least, we didn't even mention this. Today, interest rates are at 8%. But there are talks already, many talks about the Federal Reserve stabilizing the interest rates, in some cases even dropping it. In 30 years, we could have a potential crisis that could potentially lead to a drop in interest rates, which means you could refinance. If I recalculate, and I'm gonna ask now ChatGPT, 5% interest. So we're dropping interest rate by 3% compared to today. And we know already that our mortgage payment will be calculating $2,230. And that is a 5% interest. So much difference. That is a $700 difference. And consider we could potentially have a crisis and it would drop again to 3%. You could be around the 2000s. So many factors have not been added here that could potentially happen in the future. We are in a very interesting time today. With a lot of uncertainty, everybody's calling a housing crash, has been calling a housing crash in the past 2 years. But what we saw is a direct little decline because of seasonality. But home prices are still very strong because we still have a big shortage. So should you buy, should you sell? You know the numbers now. You can do your own calculations. You can think about your prospect for the future. Renting is not wasting money if you need flexibility. That is for sure. So don't worry about that. However, you now know the numbers. You now know how much you'll be paying potentially more in rent. You know how much you could make out by potentially owning a house. you have the decision, you have more information. Interest rates are a challenge, but historical demand and supply situations are pointing out for a potential high appreciation in the next couple of years. And if we look at the global market, here I'm adding my Italian point of view, if we had the same rate between the salaries of the people and the average home prices today that we have in Italy, the average home price in America will be $1.1 million. Because in Italy we have a third of your salary on average, but our home prices are very close to yours for houses that are even smaller than yours. What I'm saying is, when people say there is no more room for appreciation of homes, I would like them to look at the more global picture to understand that there are far worse real estate markets out there and that America is actually pretty affordable compared to the rest of the world. Guys, that's all for now. I hope this gave you some more knowledge. Let me know what you think. Let me know your calculation. Let me know if you're considering to buy a house or if you will keep on renting. I'm actually very interested to see the general sentiment of my watchers. Thank you for watching. Ciao.